investment means capital formation. So investment could be in two terms: gross investment and net investment. Gross investment and net investment. Gross investment is the total production of capital goods in a year. In other words, gross investment means the total addition made in capital stock in a year during an accounting year. When I say accounting year, it is also called as the financial year. And net investment, when we subtract depreciation from it, it becomes the net investment. So if we have to define gross investment, is that we will define it as gross investment is the total production of capital goods in a year. Or in other words, we can say gross investment means the total addition made in capital stock in an economy during an accounting year. So contrary to it, if we have to define the net investment will be defined as it is the gross investment less of depreciation. So if we subtract the value of depreciation of fixed capital assets from what? Exactly, gross investment. The result will be net investment. Bear it in mind that the word depreciation is very important for you people. It is also called as the consumption of fixed capital. The consumption of fixed capital. Bear it in mind because we will be using these terms time and again. So after understanding the gross investment and the net investment, we may come upon this very word depreciation, which is also called as capital formation, and we will require to define it very properly. It's a very important word, so I'll be defining depreciation. Bear it in mind, it's a very important term which you will be using time and again. It may be defined as the value of existing fixed capital that has been consumed in the process of production. Or you can define it also as depreciation means the wear and tear of a fixed asset during the production process. Look at the definition, it's very important. Depreciation is the value of existing fixed capital stock that has been consumed in the process of production, or it is the wear and tear. Suppose I bought a car in the year 2018. I bought a car in year 2018 for 700,000. Now I want to sell it in the year 2020. Normally the broker would come up with a word that, sir, every year it depreciates by 10%. So every year from every lakh rupee I will have to give 10,000 rupees away. That means I'll have to give in totality for year 2019, 2018, 2 years, that is 20%. So I'll have to give away how much? 20% of this 700,000. It will be worth less than 700,000. This 20% is deducted as depreciation charge. So this 20% would mean 7,000, 70,000 plus 70,000 is equal to 1,40,000. So let us say he will in total give me 500,000 rupees. For your convenience, for the sake of your calculation, he will give me 500,000 rupees. These 200,000 rupees, that means 2 lakh rupees, will be deducted as the depreciation charges. So I hope you understood this very important concept. After understanding depreciation, we will talk of one more important concept, that is called as technological obsolescence. This is an important concept, please bear it in mind, and here we can complete these basic or common terms which we use in calculating national income. So this is the last term I am defining, which is called technological obsolescence, which means loss of value of machine due to latest development. You have got a machine which you had purchased in year 2016. In 2018, a new version of that machine came into being. So the machine which you had bought is now obsolete. A simple example for it, say you had X-ray machines at clinics. Then CT scans came into being. So CT scan is much advanced and technologically much improved machine to see what is happening inside the body, what happened inside the body, and X-ray is something obsolete in front of it. So this is called a technological obsolescence. It has also an effect. It also adds into depreciation. That is why I took this very thing also into consideration here. After we are done with all these very basic concepts, we can do one thing. We can now simply define the term national income. National income. Before we understand this very term, that is national income, we will bear in mind some important things. A few important things we will have to keep in mind. It is usually said before we define national income, that production generates income. First we will understand this small cycle, then I'll define national income. What we said, that production generates income. That means production takes place when production takes place. People have to spend, have to make expenditure to acquire these very things, goods and services produced. But for that they must have an income. So this in turn will give rise to production. Understand it what I am saying. I am saying production generates income. But here, as you can see, what I am showing to you people, when production takes place, this production is to be acquired by the people. And they acquire it in order to use these goods and services. So this very thing, when we say production generates income, is to be understood in 3 phases. So this will be a circular diagram where we can understand that how production generates income. We can do one thing, we can make a flow chart or what is called a diagram like this. I'll rewrite it all for you people so that you may understand what we need to say here. Production, second thing is income, third thing is expenditure, this is circular flow of income as well. What it says, that when we say production generates income, so production will take place when we combine factors of production, that is land, labor, capital and entrepreneur. Yes, capital is written as CAPITL with C and it is indicated with K. Land, labor, capital and entrepreneur. So these factors of production will be paid with factor payments, land as rent, labor as wages, capital with interest and entrepreneurship with profit. So it generated an income. This income will be spent by the people for acquiring the goods and services produced by the process of this production. So they will make an expenditure on goods and services. And this expenditure will give further rise to production, because expenditure means demand of goods and services. So the suppliers will have to supply these goods and services. In order to supply goods and services, they will have to further produce goods and services. See, this is a chain of effects. People demand, producers supply, people once again will demand further goods and services, producers will once again and supply goods and services. This will go in cycles. Likewise here, production is generating income, production is generating income, income make you enable to make certain expenditures, and expenditures will give rise to further production of goods and services. Here we come to the second part of our topic. The first part basically which we are talking about, which is important, we will talk about Now, definition of national income. Definition of national income. So, national income, when we start up with it and when we start to define national income, you must keep it in mind that national income is generated only when human wants are satisfied by goods and services. So we can say production of goods and services is must to meet the unending wants of society. Thus, national income is a measurement. National income is a measurement, or we can say national income is a measure. Measure of what? Of value, of production activity of a country. This is a very simple definition which I'll elaborate. So, national income is a measure of money value, of production activity of a country. Here we now will be able to understand a lot of things. National income is a measure. First thing, it's a measure. Second thing, it measure in terms of or of money value. So everything is measured in money terms of production activities which take place in an economy. So in other words, if we have to define national income, we can say that from the previous cycle where we said it is the production process of goods and services that income is generated, or we can again term that production generates income. It's now really very clear that when we talk of national income, we are basically talking about a very big term, a very aggregate term. We are talking about all the incomes in an economy. So, if you have to write down the definition of national income, it could be written in more lucid form, is that the sum of factor incomes earned by normal residents of a country in the form of rents, wages, interest, profit in an accounting year. Understand what I am saying. I am now defining national income in three broad categories. National income can be defined in 3 point of views. Number first is production point of view. Number second, we can define national income in income point of view. Number third, we can define national income in expenditure point of view. So when I am defining from in production point of view, I am saying the goods and services produced. So national income, when I am saying it is the sum of money value of net flow of all final goods and services produced by normal residents within and outside the country during a period of account. It's production point of view. When I am putting the words like it is the sum of factor incomes earned by the factors of production. Factor incomes earned by the factors of production in the form of rent, wage, interest and profit, etc. As I said earlier, we have 4 factors of production: land, labor, capital, entrepreneur, and for them we have 4 factor payments. That is, for land we have rent, for labor we have wages, for capital we have interest, and for entrepreneur it is profit. So we are defining national income in income point of view. And when we say that national income is the net output of commodities and services flowing during the year from the country's productive system into the hands of ultimate consumers, or into the net addition of to the country's capital stock, we are defining national income and expenditure point of view. After we understand the production point of view, income point of view, expenditure point of view, production point of view is when goods and services are produced and its value is calculated at different stages. Income point of view is when normal residents, when people of a country spend or they pay the factor payments to different factors of production. And expenditure point of view is when these goods and services flow in a country's economic system or productive system and reach to the ultimate consumers. And when it reaches to the ultimate consumers, they do one thing, they spend on it and they acquire those goods and services. This becomes the production, this becomes the expenditure point of view. Now see here, as I was saying earlier in our diagram, in this very diagram, that national income can be defined in 3 different ways. That's what I was in. Production point of view, here we have production point of view, income point of view, and expenditure point of view. Now I think it's more than sufficient and you might have understood this whole concept really very properly. Now national income is to be taken into account. We have to understand national income at different levels in different ways. We have to use national income in different ways. Now here for us what becomes important is, after we understand national income in different point of views, is that we will have to say a few words about national income is calculated at 2 different price levels. So this topic is not so very large, not so very big, but is very important. So I'll be now defining national income like national income I'll refer it as NI, fine, at current prices, and national income at constant prices. Now let us understand. National income at current prices is also known as nominal national income, and national income at constant prices is also known as real national income. We have got 2 price categories. First, let us define these 2 and we will move ahead. So national income at current prices or nominal national income is the money value of all the final goods and services produced in a year. Is the money value of, let me clear up a few spaces so that, okay, so let us define the national income at current prices first properly. National income is the money value of all final goods and services produced in a year measured at current prices. What are current prices? Prices prevailing. prices prevailing in that particular year. That means, say this is year 2020, the present prices are current prices, and if we calculate national income on the prices of that very particular year of which the national income is being calculated, it will be termed as nominal national income, and that national income will be termed as national income at current prices. Contrary to it, when we talk of national income in other sense, that is national income at constant prices. National income at constant prices, which is also called as real national income. We'll define it in a different way. So when we define national income at these constant prices, or which is also called a real national, it is the money value of all the final goods and services produced in a year measured at fixed prices. That is price of the base year. What we get is national income at constant prices, or real national income. So let us understand these very two small things, then we'll proceed with in an example. This is this time we are in the financial year 2020 2021, and the prices which are prevailing in the market this time, if we calculate national income on those very prevailing prices which are in the market presently, these prevailing prices, it will be termed as national income at current prices. But it is not a true measure, because there are a lot of fluctuations which take place. So what is being done? We take a base year. That base year is free from all kind of problems, etc., etc. When we will be calculating national income next year, we won't take 2020 as the base year. We cannot take 2020 in future as a base year, because 2020 is the year of COVID-19. So whole the lockdowns and etc. has got a lot of effects on price levels. So a year will be taken which would act as a base year. Say in Indian context, this 2004 2005 used to be as a base year, because it was free from different problems and all. So the prices prevailing from 2000 and any year, let us say if we take the prices of 2014 and 15 to calculate national income of year 2020 to 21, this will be on the base year prices. So this will be the real national income, or the national income on constant prices. So dear students, here we are now able to understand almost every basic concept which we will require in this very chapter. To perform certain calculations and different measurements. After we are done with all this, we will have to do a small next topic, which is called the circular flow of income. It's one of the most important topics which is being used time and again in different exams. So dear students, you will have to understand that this topic is going to help you in many other topics. It's a very small topic. We used to have different models, so a 2-sector model, a 3-sector model, and a 4-sector model. Now, according to latest syllabus, what we have to do, we have to understand it in a 2-sector model only. 2 sectors. So we will be taking only 2 sectors, and this diagram will show you the real flow, that is, and the money flow. Both I'll be considering in it. So please, you will understand a few important things, that is, what is a factor market, what is a product market, what are the 2 sectors, how they give and take different things to each other. So the topic is circular flow of income. Okay, so there are various models, but we will take in circular flow of income in a 2-sector economy. So what are the 2 sectors? We'll be taking as firm and household. Firm and household. These are our 2 sectors. So firm is also a producing sector, and household is the consumer sector that we know now. Usually, household will provide factor services to the firms. What are factor services? We have discussed it many times. Exactly. Land, labor, capital, entrepreneur. Or household will provide factors of production to the firm sector. Contrary to it, household, the firm, will combine these factors of production and will provide goods and services, finished goods and services to the household. See, now when household is providing to a firm the factor services, the firm against it will provide factor payments, will pay for these factor services in case of factor payments. Now you know what factor payments are. For land, exactly, rent will be paid. For labor, wages will be paid. For capital, and interest will be paid. And for entrepreneur, profit will be paid. So, if now the firm is providing goods and services to a household, the household will have to pay for those goods and services. So, they will make consumption expenditure. They will make an expenditure which is technically known as consumption expenditure on goods and services. This is a very simple, very small model we are talking about. The firm will provide goods and services to the household. Household will buy those goods and services and make a consumption expenditure on those goods and services. The household will provide factor services, land, labor, capital, and entrepreneur to the firm. And in return to it, the firm will pay factor payments, for land the rent, for labor the wages, for capital the interest, and for entrepreneur the profit. So this is how it works. We can include and we can put many more things in these very two sectors, but the most important thing what I would like to talk about here is that you can distinguish, you can term it, the above two arrows will constitute the factor market. Factor market. And the below, goods and services, consumption expenditure on goods and services, they will constitute the product market. You must be aware about it, how it happens. So sometimes what is being asked, you are being asked to make a model of a circular flow, to show a circular flow from the factor market point of view. At that time you will have to take only the above two arrows into consideration. If a product market point of view, you will have to take only below two arrows into consideration. So the above part constitutes factor market, while as the above part constitutes the factor market, whereas the lower part will constitute the product market. You can include, or you can just put in many things into this very concept. Say this is what you have to do, but for better understanding I'll put one more sector in between these two, that is the financial sector or the banking sector. I'll call it financial sector. So this financial sector, both the two, the firm as well as the household, will have some things to give and some things to take from it. That is simply household, if it is being taken or it is being given. So a household can put in their savings in the financial sector, and a household can take certain consumer loans, etc., from the financial sector. Likewise, a firm will give certain things and will take certain things. What a firm can give in is saving their residual profits. As their residual profit whatsoever remains, they will save it in a financial institution, in a bank, or they may pay installments. But what they will take loans, and these loans are important for the investment. These small, you see here, I'll show with a red arrow, these savings. When household sector saves something in the financial sector gets enabled to provide loans to the firm sector, and firm sector gets enabled to make certain investment in the market. So dear students, this was a two sector model wherein we understood that how we can proceed or how we can do things with a financial sector as well. So this model is important from the examination point of view. The next lecture will be entirely now about the aggregates of national income, in which we will understand different aggregates of national income. Thanking you. This was the first, almost a very big part of your course. So thank you. See you in the lecture third. Now lecture third will provide us lot more insight.